Everybody, it's Rob Keynes with the Freedom Report. We're going to do a real quick video here on Thursday, July 18th, 2024. Looks like things are getting exciting in terms of political risk, which we'll get to here in a moment. But I want to talk about the CPI lie, or the CPI numbers that have come out in the last release. I think that was about a week ago. CPI went down while consumer price index went down, while producer prices went up, and producer price has been going up for a while. I don't trust the CPI number, and I'm going to tell you why I don't trust it. We're going to read from my book that I wrote in 2009 on all the changes to CPI and why, you should take heed of those when listening to the government's number, and why, a lot of the statistics that you get from the government aren't really accurate. So let's go over that real quick. I'll show you the book. If you guys haven't read it, you don't have a copy, it's still for sale on Amazon. Even though it is about 15 years old now, the lessons that we learned of the book are still relevant today. So here we're looking at chapter 2, which in my book is called Signs of Destruction. By the way, the book is called Drop Shadow. Let's go here. This is a PDF version. The Truth About Our Economy and How You Can Survive the Coming Economic Collapse. The website that's shown there is no longer working. It was for promotional purposes of the book. We've long since taken it down. Here's a quote from 𝙁𝙍𝙀𝙀 as a former chairman of Chrysler. It says, when future historians look back on our way of curing inflation, they'll probably compare it to bloodletting in the Middle Ages. In other words, we're doing the exact wrong things, exact opposite things that we should be doing, and we need to have a better way of dealing with inflation. That's primarily because inflation is simply the printing of money. Until we get away from that, it's not going to matter. And in the book, in chapter 2, on page 32, I'm talking about 24 in the book, 32 total. I'm talking about CPI and why, it's an issue. And whole chapter 2 is talking with government statistics, but I'm gonna focus in on CPI here and what you should be aware of. So as I write in the book, quote, why does CPI matter? First, it reduces what a person can purchase in the long term. In addition, the CPI is indexed by which government programs are attached. Today, nearly 1/3 of the federal budget is indexed to the CPI. Therefore, if the CPI is not accurate, then payments and welfare programs will not track changes in actual inflation. And I would point out that more than 1/3 of the budget now is indexed to CPI, but back when I wrote it, that was the correct number. In addition, cost of living adjustments, such as for wage increases, are often tied to the CPI index. Thirdly, the federal tax bracket is also indexed to the CPI to account for inflation. If the CPI is understated, then real incomes will rise faster than the brackets can be adjusted, causing more people to reach higher tax brackets more quickly. Core inflation is a new government price indicator which takes out food and energy prices. One reason for such a change is that these prices fluctuate wildly and lead to misstatements in inflation. So we're going to talk about how the government has successfully modified the inflation measures. Substitution, let's talk about that. CPI rates have been amended since the Boskin Commission recommended that CPI values were overstated in the 1970s. The commission concluded that 4 factors affected CPI rates. Now, I wanted you to note that a lot of the changes to statistics started in the 80s. Why? Well, you had commissions like the Boskin Commission and other studies, which looked at it in the 70s when we had that high inflation. And the government was incentivized to downplay the effects of inflation after that 1979-1980 episode. And so the Boskin Commission went back and examined it and made recommendations on how to deal with it. It wasn't how to get rid of the money printing. It was how to adjust the numbers so that people would be less aware. Now, look at how the Boskin Commission recommended we change, and then I'm going to walk you through some examples. As I wrote in the book, the Boskin Commission told us that the real observed CPI is lower than stated government-issued CPI because of 1, quality change bias, 2, outlet substitution bias, 3, new product bias, and 4, product substitution bias. Let us examine these concepts further. Quality change bias. It's the failure to take account the improved quality of machinery and technology and only accepting an increase of the price unit of a product. In other words, because we get an increase in our standard of living due to technology, the CPI is overstated. So what they do is they get to calculate some sort of technology cost or quality of living increase and subtract it back out of the CPI data. In other words, they're stealing the value that technology brings to your life by lowering prices, by understating the CPI so that the government can go print more money, essentially. So they're stealing from you the benefits of technology in society. So all of you, those of you investing in the tech market that think the AI is going to save us or technology is going to save us, it's not, because all the government does is take the value that technology creates and backs it back out of the CPI calculation, so they can print more money and basically destroy the long-term value of your currency, the dollar. So technology is not going to save the economy as long as the government's doing this and they print the money, because they simply can take it out of the money supply. So whatever Google and Microsoft and all these companies are doing to increase your lifestyle and quality of life, the government simply takes back out of the CPI calculation, which allows them to print more money. So you're in the long run getting no benefit from the advances in technology. It's called stealing by the government. Then there's the outlet substitution bias. It says when consumers go to discount or outlet stores where prices are cheaper. Notice how they're guesstimating what you may pay at an outlet. And they're saying, if you're saving 10% on your item, we're just going to understate CPI by 10%. It doesn't change the fact that the items got more expensive, and that's why you're going to outlet stores, and that's why outlet stores were created in the first place. It's just covering up the fact that the dollar's eaten away the value of your purchasing power. And so the people come up with another way to distribute it, advances in the distribution network and the supply chain, and the government just backs out those as well. It says, okay, we'll steal from the improvements in the supply chain so we can print more money. This is absurd. This is absolutely absurd, but this is what's been going on since the Boskin Commission and their changes in the 80s. All right, new product buys, not taking into account other substitutes such as watching a DVD instead of going out to the movies. So in other words, when something's something that you like going out to the movies, cost X, and instead you choose to stream it or watch a DVD, the government says, great. Then the cost went down by the fact that you're decreasing your quality of life. And so we're going to back that out of CPI and then print more money. Well, the whole reason you're watching a DVD instead of going out to the movies is because the government's been printing money and it got too expensive in the first place. And that's why DVDs came about, and that's why streaming came about. Cheaper distribution methods. And the government says, great, you're using a cheaper method, so let's understate the CPI and print more dollars. And then there's product substitution bias. Consumers buy cheaper items when higher end items get more expensive. Same thing. Basically, they're saying, well, dollars is raising the cost of items, so we're making all these innovations. Well, let's steal all that money that we got to the value of innovations to where what's going to happen next? The cheaper solutions you're already using are going to be too expensive, and we're going to go to cheaper ones, and the government's going to go steal all that too. It's basically theft. The first and most obvious point to make about Boskin is that all four issues reflect the trend of the consumer to purchase downward as inflation affects their pockets. A quote from the book: I don't understand in what parallel universe the members of the Boskin Commission existed when they made these recommendations to lower the CPI. Look, if prices are going higher, so we're not able to afford the same goods we used to buy, then that means we're losing purchasing power. This is not a reason to understate the stated CPI numbers. When you modify CPI to take these into account, you obscure the fact that prices are not actually falling, resulting in lower inflation. The prices are rising, in fact, faster than incomes are rising, and the consumers are just adjusting their purchases to inferior goods because they have no choice in many circumstances. For example, the product substitution bias data point seems to confirm this. As items get more expensive, consumers are required to downgrade. This should not adjust the CPI level down at all. It should be recognized by our government, and more importantly by the people, that inflation is becoming a problem that is eroding our purchasing power and our quality of life. A common public criticism of the Boskin Commission is it did not take into account that while buying inferior items reduces costs, it also reduces the quality of life by the same amount. If the Commission removes this value from CPI, then the CPI value should have no value in measuring quality of life services, e.g. social services we talked about at the beginning of the chapter that are indexed to, guess what, the CPI. Should not be used to adjust tax brackets and should not be used in cost of living wage adjustments. Basically, the Boskin adjusted value of CPI should be scrubbed completely because it is useless and hides the problem of printing too much money. Let's go on to geometric weighting. Another way in which the government has manipulated inflation numbers is through a process called geometric weighting. When certain goods get more expensive, they are weighted less in the government CPI numbers because it is assumed by planners that people will buy less of said product. The items suffering less inflation are also weighted more heavily in the calculation. Geometric weighting keeps total reported inflation down regardless of true market choices of consumers and sellers. And like substitution, it hides the obvious fact that if some goods continue to rise in price, higher inflation is a result, which leads to a lower quality of life over time. And then there's hedonics. This is where the CPI manipulation gets really subjective and ridiculous, I wrote in the book. Hedonics is a made-up measure of the additional happiness of a good we get from technical innovation. Say, for example, that a 30-inch flat-screen television cost $600 in 2007, which was not unheard of back then. They were more expensive. If one buys another television of the same size in 2009 for $650, then we can say we had inflation of $50 in 2 years. However, the government does not see it this way. The government estimates that because the 2009 television has quality improvements, such as increased resolution, our benefit from the television increases. The government will then reduce the real purchase price of the TV to a made-up value, which is then used in official CPI measurements. So you can see here that technology, they're saying, well, you get additional units or benefits of happiness. So we actually just adjust the price itself. So it's a lot of the CPI index is not even reflecting the actual price that you're going to buy online or in your store. They literally changed the number to some subjective happiness quotient to reduce the CPI. It's absurd. But this is what the government's been doing basically since the 80s. The government adjusted price of the television could be $450, which in their view would reflect a 31% decrease in value for the CPI for that television. The government does this for many products, not just televisions. It lowers the reported inflation rate, even though the actual prices of the products we buy are rising. In a 1997 Business Week article, Gene Kretz states, since the start of 1995, for example, Labor Department statisticians have modified their treatment of rents, hospital prices, and generic drugs, and altered sampling methods for food and non-food items. These and other changes have cumulatively lowered the current rate of consumer inflation by 0.2 to 0.3 of a percentage point. What's more, the process will continue in 1988 and 1999 as the government updates the weights for items in the Consumer Price Index, changes the treatment of computers, and makes other modifications to reflect the prices of new goods. The reason I added this older article in there was to show you that this has been going on for a long time. This is a 1997 article about what had already been happening. We're already 27 years beyond that. This has been going on for 2 generations of Americans. It's been going on for Gen Xers and millennials as the primary buyers in society. The millennials are now in their prime age of buying. So it's 2 generations who have been affected by all these lies. It's been going on since before a lot of you watch a show have been born. And a lot of you who are older were probably in your prime earning age when this all started happening. So your entire life of buying houses and computers and goods and food and, healthcare has been affected by the outright lying that the government does on the CPI. What are the consequences? Quote from the book. What are the effects of revising the CPI downward? Well, welfare payments such as Social Security are reduced. This is a benefit to the government in terms of declining welfare payments in relation to the real dollar value. If the historical CPI index since the 1970s were changed using the new modifications, the data would show that the U.S. has experienced relatively modest inflation, then that real wages were not falling. Therefore, it is in the best interest of government to do this to create the illusion that our current economic model promotes prosperity. The CPI modifications will add up over time. Remember that interest rates are cumulative, meaning that a change in year 1 is thereby multiplied by the next year change and the next year and the next. The real effect is felt over time and indicates why inflation is not felt as hard in the early years, but really makes its effects known in later years, as all of the small increases have multiplied together into a really large increase. And I'm going to give you a real quick example, and then we're going to stop the share screen. And I'm going to summarize for you. In the book, I use the principal rate interest calculator. If you've ever been in finance classes, it's like the one of the first formulas you ever see. It's used in figuring out essentially the increase in price over time when given, X rate of interest or X rate of price increase. So you get price equals 1 plus the rate of increase to the exponent of the number of years or number of periods. In this case, we're going to use years. So we're just looking at inflation, which would be R. The price equals 1 plus the inflation rate, whether it's 1%, 2%, 3%, 4%, 5%, to the exponent of or to the power of how many years you're going to do that. Now listen to how this increases over time, much more than you may expect. It's not linear, it's exponential. Note that the interest rate R is added to the beginning value price here, set equal to 1, and then raised to the power of the number of years. As the number of years increases, the factor of the price increase gets exponentially larger. So in other words, the more, take the very first year we had inflation, say it was 2%. The more years that pass, that 2% gets raised to the exponent of the number of years for every year, which is why it goes like this. And then you see the hockey stick. That's why you see hockey stick charts in finance so often, because it's exponential. The original rates of increase are added to the new ones and then raised to the power of each and every year. And so you get this massive increase at the very end. As the number of years increases, the factor of the price increase gets exponentially larger. So if we had a set inflation rate of 4%, the increase in year one would be from 1 or 100% of a price to 104 or 104% of the beginning price. When years equals 2 or n equals 2, the price increased to 1.0816. When n equals 18, the price increases to 2. Well, that sounds fine. Why is that an issue, Rob? Well, therefore, prices double in 18 years at a yearly inflation rate of 4%. Double in 18 years at 4%. If 4% were linear, it would take, would that be 25 years to double? But it does it in 18. Why? It's the exponent power. If the inflation rate were not exponential, meaning raised to the power of, then we would simply calculate a 4% increase times 18 years, which would result in a 72% increase. So because it's exponential, because the original price increases get multiplied every year thereafter, you're increasing prices faster. And in fact, over an 18-year period of time frame at 4% interest rate, your prices are actually 28% higher than if it were linear, if you're just adding 4% a year and not multiplying. But when a price rises 4% in year one, the new price in year two is 1.04 times the 1 year price. And then the subsequent 2-year inflation rate would be both the 4% in 1 year and the 4% in the second year in year two, and then multiplied by 4% in year three, and so on and so forth. You get the exponential equation. So the Business Week article goes on to note, as a result of all these adjustments, the reported rate of inflation in 1999 will be about 3/4 of a point below the old 1994 yardstick would have shown, the old system, and perhaps more. But the government is not going back and fixing the past data as it makes these changes. The effect is to bias inflation downward. This helps explain how the current situation where growth seems high and inflation seems low. The change, and that's a Business Week article. That's not me saying that. That is a major publication in the 90s. Business Week is a huge publication. The changes will understate inflation and prices and overstate growth. Inflation is used in the calculation of GDP, our gross domestic product, which is how we determine recessions. That's why you cannot look at current rate inflation and current GDP and just discount GDP by current inflation and say that we're having growth. You have to take into the effects of the exponential increases of all previous years of inflation and back that out of all previous years of GDP to see where we actually are. So even if you have a positive GDP print now, you're probably still going negative because of the misstatement of CPI and how that is compounded year after year after year. So when the government understates a number, the growth appears larger than it really is in the GDP. If the government did not remove inflation from GDP, then it would be impossible to tell if growth comes solely from the rise in prices of components in production or from growth in production itself. And as the article notes, the change in inflation numbers are not retroactively applied to past inflation rates, making prior period comparisons hard to make. So when people are graphing out prior periods and they have a modified and basically false government number like this, you cannot compare what's going on now to 5 years ago, 10 years ago, 15, 20, 30, 40, 50. That's also why when people compare what happened in the Great Recession in 2008 to what happened during the Great Depression, you cannot do that because the numbers have been manipulated and you can't make equal comparisons over time periods. And that also screws up all government reporting, all government indexing, the value of all government social services, so on and so forth. It's all now one big fugazi, and it obscures the real story of how rising prices affect purchasing power over time. And there you go. That's the power of manipulating government statistics and putting it into an exponential formula. And that's why I will quote every Tuesday in our weekly market wrap, I will quote all the numbers. I'll say this is the number, but I'll tell you, you cannot just look at the number. And when I said last year that we were in a recession, even though GDP was positive, now you understand why. Because if you back out inflation over time, we've been negative GDP probably dating back to 2008 in real terms, in real terms. And I'm not talking about the dollar amount. I'm talking about the actual amount of goods and services we have produced. It's not positive. It's been negative since the Great Recession, because of manipulation of all these numbers by government and the exponential effects of that over time. We never came out of recession, ladies and gentlemen. And it's just the way it is. And I wanted to point that out. I wrote that back in 2009. Given that we're 15 years past, you can imagine the results of all these numbers, all these mistakes, and all these hidden things compounding over time. But I also wanted to educate some of my younger audience. We're getting younger people every day that may, not have been reading those articles back then. And they've been all brought up in this and this new economic system with all these lies as if this is the way we've always been doing it. But if you were born after 1994, when a lot of these changes were instituted, or actually some in the 80s, in the late 80s for some government statistics, you would have no idea. You would have no idea what's been going on. But it's also why when you get in your finance class in college or even in high school, don't believe the charts and the figures they give you. Now you know why you can't believe them. Not only can you not believe the way the government's calculating them, that number is accurate, but you can't believe that over time that these graphs and charts make any sense whatsoever, because they don't. And that's why the current generations, the millennials and the up and coming one, the Gen Zers, are getting screwed so bad and cannot possibly keep up with the previous generations. They'll never keep up with Gen X and the baby boomers until the system crashes and resets, because the numbers won't allow them. All that exponential growth in prices went mostly the baby boomers, and to a lesser extent my generation, Gen X, and in terms of inflation adjusted values. But guess what? What goes up must come down. So who's going to lose the most in the next crash? It's going to be baby boomers first, Gen Xers second. And actually the millennials and Gen Zers will have the least to lose, because they had the least of the bubble assets in the first place. And so I actually think that the millennials and the Gen Zers are going to have the advantage when the crash comes. They're not going to lose everything, and they'll have everything to gain by the reset of the new system. The older guys who are currently benefiting from the system are going to have the most to lose, and will have less time and less ability at their ages to regain that for the rest of their life. That's why you go into gold and silver, because that's your great equalizer, because gold captures the value of that over time, especially when there's an economic or currency reset, and you get the real numbers for gold and silver. And that's why I advocate gold and silver. Gold and silver are the only thing in the last 5,000 years that have stood up to government manipulation like this. And it doesn't happen all at once. You got to be patient and wait for the big reset. But even so, we've been keeping up with CPI basically since 1971, all intents and purposes in gold. But we haven't been keeping up with the real inflation numbers and the real creation of the monetary supply, which nobody actually knows, since some of this is created in sort of darkly and not reported through government statistics. And a lot of it's floating in Eurodollar accounts elsewhere in the world, and we don't have a clue what that actually is. I don't believe the reporting on that. So you have a lot to lose if you're in the older generation. You may want to prepare for that. If you're in the younger generation, the one bit of good news you got is you're screwed right now in terms of your purchasing power because of all this stuff. But you're going to lose less when the crash comes, and you have more to gain after the reset. You just have to position yourself in the right assets to be able to capitalize on that. Real quick message from not really a sponsor, an affiliation I have with Kinesis. Kinesis.money. If you're interested, there's a link below. You can sign up. If you fund your account, go through KYC and buy some gold and silver and use that on the chain. And you can even buy Bitcoin and other things like that through that portal too, if you're interested in that. I do get some benefit. I don't get any benefit if you don't. So it's not like this is prepaid ahead of time, but it does help the channel. And what Kinesis does is it puts gold and silver in circulation and makes it money. If you have a gold and silver sitting under your mattress or in a hole somewhere in a vault, it's not money. It cannot be money. You cannot have Gresham's law unless that gold and silver is circulating. So all of you that understand Gresham's law, bad money pushing out good, and the opposite law that good money will come back, it can't. If you've got it hidden somewhere, you got to spend it. Kinesis is the best way to do that, I believe. If you have questions about that, hit me up in comments or the chat, and I'll explain it to you. All right, now on to the second part of the commentary. I said on Tuesday that, in my opinion, don't worry too much about the conspiracy theories. And there's more coming out. There's another video out that potentially there was a shooter on a water tower. And, you know, I see them all. And I'm not going to deny that they exist. But at the end of the day, I want to talk about this for a moment. You can dive into whatever conspiracy theory that you want. I got no problem with it. I'm not here to be your dad and tell you what to do. But it can drive you a little crazy. And especially this stuff is amplified through social media. And it's going to be hard for you to determine what's right and what's wrong and what's correct and what's not. And at the end of the day, it's going to make you angry. It's going to put you in a state of anxiety. And then you're not going to have the ability to see clearly what's coming and to prepare and to be focused on what matters. And I'm going to reiterate this today. Please focus on what matters. Focus on yourself and your family and those loved ones that you can help. Do the things that you can do to stabilize your economic situation. Make preparations ahead of time with food, water, your spiritual. I've gone back to Bible study, for example, and got back to regular attending church. I'm a Christian. It's what I do in order to build up my spiritual armor and build up my clarity as to what I should do and how I should react in the coming world. It's been a long time coming, and it's a shame that I took that long to do it, but at least I'm doing it. And I'm convinced we're about to go through a spiritual battle of good and evil, a very spiritual one. Regardless of what religion you are, even if you're atheist, I think you can see that it's good versus evil. That's pretty simple to see what we're fighting here. And I think we can probably all agree on that. One other comment I wanted to say, I made a lot of commentary about what happened at the rally where Trump was, there was an assassination attempt. A lot of people are going to think I'm pro-Trump. I wanted to reiterate, I've been an independent. I'm probably closest to a libertarian, if anything, although I don't know that that box quite fits me. I'm really a originalist on the Constitution. And actually, if there's some things we could strike out and change in the Constitution, I would, to make it even more protective of individual rights against the government. But that being said, I'm not on the red or blue team. And just because I was questioning what happened with the Trump thing, if it had happened to Biden, I probably would have questioned the same thing if it looked sketchy. I'm not partisan that way. I'm not blue or red. And there were a lot of people that reacted angrily, both in comments on my YouTube video and on X or Twitter, because of what I said, making assumptions about my allegiance or alliances. And I'm basically going to say the same thing I always said. I'm against corruption in government. I'm against this kind of evil trying to murder a presidential candidate and a former president, regardless of what side of the aisle they're on. I also believe we should get out of the two-party political system and go to a multi-party system and reduce the overall power of the federal government. I've said that probably a bazillion times. And that's still my stance. And it doesn't matter who's getting shot at. I just think it's a loss of culture, a loss of integrity of the American system if we allow this to go without questioning what happened. So while I say don't get too crazy on the conspiracy theories, because it'll drive you mad and probably pull you off of what you needed to be doing, which is focusing on protecting yourself and your loved ones and protecting our way of life, our free way of life. At the same time, it's good to be aware of what's going on. Just don't let it drive you crazy. And don't make assumptions about people because they question events. That's too easy, and it's sloppy, and it does a disservice, and it's very divisive. It's divisive when we go accusing each other of things. And I had to clean up my response a little bit on Twitter, because at first I was a little irritated people were doing that. And then I realized I was on social media, and it's the most toxic place to be honest with you. I try to be one of those non-toxic voices. I can go onto social media and point out 50 people that are there just to get clicks, or just to divide people, or just to get a rise out of people. And it's completely counterproductive. It would be like somebody going to a theater and shouting fire and panicking everybody. And that happens on social media a billion times a day. And I'm just here to say I'm a guy on social media that doesn't try to do that. But if I see something that's wrong, I'm going to say something. And it's not that I'm buying into one side or the other, blue or red, because I realize there's corruption on both sides. I understand that. But I'm pointing out that it affects us. It affects the stability of our political system, our economic system. The last thing I wanted to say is I got heavily criticized for backing out of my prediction that we would have a normal summer in gold and silver and probably a little bit of price fade. I did preface or couch that by saying that if we had a black swan, all bets are off. Well, I didn't expect a presidential assassination. I was thinking a bank failure. I was thinking a war. But, you know, it appears as though that the attempted assassination has put a floor under gold and silver, a soft floor. Doesn't mean it can't, but it means that it's pushed it to the upper end of its current range. It hasn't broken a major technical range, but it's pushed it up to the edge of its range. And it looks like we may have fairly solid, they may soften a little bit still until we get to mid-September in gold and silver, the prices. But I think given the amount of instability going on, I have to go back and remember what I said last year. I said this is going to be the year of turbulence in markets, and it is. And apparently leading up to the election, there's going to be a lot going on. This may be the most contested election with the most vitriol and open hate and divisiveness that we've seen in the modern era. We may have to go back to the old early school elections where this used to happen more often, as I pointed out on Tuesday's program. We're going back to a period in time when there are high stakes, and politically this is going to get very interesting. And I think that that environment is now, because we're in a fully connected 24/7 world, is causing the entire world to seek safety in finance. And so I think now the entire world is getting interested in gold and silver. Now, the retail US buyer is not buying squat still with respect to gold and silver, but people around the world are, and the big institutions are noticing, and that's being reflected in the derivative trade up on COMEX and in London, and that's why the prices are staying high. Now, the prices for silver in China were about 34.20 yesterday, and the prices in the US were somewhere between 30 and high 30s, low 31. I forget the exact number. So you still see a premium in other markets. So we're still price suppressing here in the US quite a bit. But that price suppression is not keeping it below that magic $30 line for silver. It's not keeping it below 2,400 for gold. Now watch, as this report comes out later today, I'm sure that there'll be some sort of crash, but I'm talking about as of about 2 p.m. In fact, I'm going to look at prices real quick and quote you as of about 2 p.m. Central Time. I'm looking at gold 24.43 US, and silver's dipped below 30. It's at 29.78, just to give you a quote. So if it changes between now and then, as it did on Tuesday, just understand when I'm recording this. But in any case, we're still in trading ranges, but it's buoying those metals up to the top. Now, we did see a price retraction today, and I'm not sure if the assassination attempt is going to keep gold and silver buoyed for 2 months. It's not. But I think we're in an era of high volatility, high risk, high uncertainty. For example, there's a story on Zero Hedge that shows that about 80% of people in a poll, I think it was almost 87% of people in a recent poll, were afraid about violence. And for those that are criticizing me, saying that this assassination attempt is not going to really affect the financial markets, it is affecting the financial markets, because when people get in fear, they change where they put their money. I'm telling you. And so I think for the rest of the summer, I'm going to remove any predictions about gold and silver fading. It still could. That is still the seasonal trade. But we may have another series of events. And it may not only be in the US, it may be elsewhere. I think that the geopolitical risk right now in the world is the highest it's been since I can remember being alive. And forget the Gulf War and all that kind of stuff. This is the highest I remember since I've been alive. Just the amount of uncertainty politically across the world, not only in the US, but across the world. And I think that that may buoy some asset prices, things that are considered safe. I know the crypto complex, Bitcoin and the rest of the cryptos are doing pretty well as a result. Some people are going to go to TIPS, inflation protected treasuries. Some people are going to go to the bonds. That it's had, at least in the immediate term, on the longer term bonds, actually lower the rates just a bit. We'll have to see what happens over the long run. But I think what people see as traditionally safe investments are going to get bid on a little bit more than they may have otherwise, and we'll have to see what that does to asset prices. But I definitely think what's going on has affected people's view of safety in the markets, and is going to be reflected in market prices. So out the window goes the seasonality of the gold trade, at least for now, and we'll continue to cover it over the summer, and we'll see what happens. All right, that's my message for today. Thank you guys so much for tuning in. Hopefully the information from the book helped you, and especially the younger crowd, to know the extent and the time frame at which all this manipulation has gone on. This is not something that occurred in the last few years. You can't blame it on any of the current administrations. This has been going on for over 30 years in our government. And when it goes on for that long, the misstatement of the effects of inflation, the misstatement of the effects of GDP growth, the misstatement of the effects of benefits and wages gets amplified so much over time because it's exponential, that you start to realize that the whole system is a lie. It's a fugazi. It's a lie. We don't know what the real numbers are and can't know what the real numbers are because of that. But we're going to find out, because in naturally closed systems, as we have on this earth, the truth always comes out. And it's going to come out in a big way in economics over the next several years, as I've been predicting. About the middle of this century is when we're going to start seeing it. In 2024, certainly we've had a year of volatility. I think it's continued to be volatile. We're going to see asset price swings quite a bit. And we're going to see a lot of stuff going on. We're going to pay attention to it. All right, thanks for joining. We got out in under 34 minutes. Not too bad. This is Rob with the Freedom Report. Have a blessed day.